Hello, this is Mijin Wu from the American Stock Theory University. Let's start today's United States stock news for August 18th. Welcome back to Mijin Wu, where we always uphold the basics of United States stock investing. I'm recording this broadcast exactly 2 weeks since the last one. In terms of episodes, I've skipped the United States stock news 10 times, but it feels like I've taken a break for about 10 months. That's because I used to send out broadcasts every day, so taking a break like this in the middle feels that much longer. I'm also feeling very nervous today. I'm a bit worried about whether I can successfully do the broadcast. Anyway, even if today's broadcast isn't as good as before, I hope you'll understand. I'll do my best to recover soon so I can bring you broadcasts with the same quality as before. I still haven't been able to set things up properly to do the broadcast yet. The main issue is the internet. I set up a studio in a big room at the office, but the internet there isn't strong enough for recording or working. I can barely get a connection. So today I had no choice but to come out to the living room to record. Because of that, things are a bit messy, and for the next few days the broadcasts might be a bit shorter. And one more thing, now that I've moved to Kuala Lumpur, keeping the broadcast time consistent may be difficult. Of course, after some time a routine will form, and then I expect the broadcast will go out at a set time. Until that routine is established, since the broadcast time might be a bit irregular until then, I hope you can understand and be patient with us. All right, then let's get started with today's Big Two news, coming to you for the first time in a long while on August 18th. Let's quickly review how the United States stock market performed during my break. I wasn't able to bring you the United States-China broadcast for the past 2 weeks. That means we should take a look at the movements of the United States and Chinese markets from August 1st. In other words, from the beginning of August until now. The S&P 500 has risen about 3 to 4%. So fortunately, while I was away, the United States and Chinese markets showed some strength. Personally, I'm really grateful for that. Since this is the Monday broadcast, let's begin by reviewing last week's United States stock market mood. First, if you look at the S&P 500 map, I've set the period to 1 week. Over the past week, the number of rising stocks has far exceeded the number of falling stocks. Of course, some of the big cap tech stocks we love, like Nvidia, have dropped. Palantir, which individual investors love, also dropped by 5.24%. However, overall, as various sectors surged across the board, the atmosphere in the United States stock market wasn't bad over the past week. That's how it can be summarized. If you actually look at the movements of the major indices, most of them recorded gains. At the very top, you'll see an index that surged by 4.08% over the past 5 days. It's microcap. That means it's a microcap stock. Following that, small cap stocks went up by 3.2%. So, just like I told you all before, I took a break from broadcasting. Since then, so from early August, the atmosphere has been like this. Small cap stocks were dominating the market, and the reason the stock market was driven mainly by small cap stocks is that individual investors are ultimately controlling the market. Institutional investors were being a bit cautious. In conclusion, the United States stock market continues to be led by individual investors. In a way, this can be interpreted somewhat negatively, since institutional investors are not jumping in, and it's individual investors who are leading the market. In a way, a bubble is forming, and rather than strong fundamental stocks, small cap stocks are leading the rally. This can be interpreted in 2 ways, but if we look at it negatively first, in a way valuations are going up. Stock prices are rising not based on earnings, but because valuations are getting higher. This is a negative aspect. On the other hand, one positive interpretation is the expectation of interest rate cuts. This expectation keeps growing, so there is a high possibility of a rate cut in September. That's why the focus has shifted to small cap stocks recently. Which are those stocks? Small cap companies, which respond strongly to interest rate cuts, have recently been gaining momentum. That's how you can see it. Now, if we look at the performance of the 11 sectors that make up the S&P 500, over the past week, healthcare performed the best, rising by 4.65%. Second, communication services rose 3.58%, while consumer discretionary increased 2.35%. Following that, basic materials were up 1.90%, financials were up 1.18%, energy was up 0.74%, and real estate also showed a gain, rising by 0.19%. There were 4 sectors that declined over the past week. Unfortunately, technology stocks were among them, as you can see. Now, since the market has generally performed well over the past 2 weeks, the market breadth isn't bad either. The range is 58 to 8. So, among the 500 major companies that make up the market, almost 60% are showing a good short-term trend right now, and more than 60% are also maintaining a good long-term trend. Now, if you look at the VIX index, the VIX is also very low. There was a brief spike in early August, but except for that time, the VIX index has been continuously declining and is now down to 15.09. Therefore, the market is still in a Goldilocks phase. This can be interpreted positively. Next is the Fear and Greed Index. Where is the Fear and Greed Index at? We're still seeing a very familiar pattern. Even before my break from broadcasting 2 weeks ago, it kept moving between 63, 64, and 65. So we can see here that the Fear and Greed Index hasn't really changed over the past 2 weeks. The same applies to the market score from Choice Stack 77. Does that mean it's swinging back and forth between greed and excessive greed right now? The market is overheated, and there are that many stocks with very strong price trends. The problem is that as this good condition continues, the market doesn't shift into a downward trend. That means there's been no major bad news. Next is Mijon Top Picks performance. The stock that performed the best over the past week was Peel Solar, with its price rising 8.29% during the week. Advanced Micro Devices rose 2.75%. Coinbase 2.26%, Meta 2.07%, Google 1.23%, and Bitcoin increased 0.85%. Talon Energy rose 0.84%, Broadcom 0.45%, Tesla 0.28%, and BIT 0.19%, with several stocks posting gains. 8 stocks declined. Taiwan Semiconductor Manufacturing Company was down by 1.2%, NVIDIA by 1.23%, Viestera by 2.37%, Credo by 3.05%, The Trade Desk by 3.89%, Palantir by 5.24%, Celestica by 5.87%, and Strategy by 7%. It was worst at 29%. The common point among the stocks that showed a downward trend over the past week is that most of them had shown a positive trend for a very long time. So if you look at the latter part, except for the trade desk, most of the stocks that have shown a very good price trend this year are representative beneficiaries of artificial intelligence, and it seems possible to interpret it as the stocks with the best recent price trends saw their funds rotate and move into other stocks. At the very top, Persler went up 11.05% on Friday. Let me briefly explain why the stock price surged. As you can see here, the Trump administration announced federal tax credit guidelines for the solar industry, and they were released at a much more relaxed level than the market had feared. So there were concerns about what would happen if Trump completely eliminated the federal tax credits for the solar industry. It turned out to be better than expected, so not only for First Solar, but also solar-related stocks like Enphase Energy and Sunrun all showed a sharp upward trend in the stock market on Friday. Let's take a closer look at the details. Under the new guidelines, residential solar power will still follow current regulations. That's why companies like Sunrun have seen their stock prices rise significantly. You can say that investors cheered. The large-scale project part is related to First Solar. They were given a 4-year completion period, so 4 years is actually enough time to start a new project. As you can see here, more than 2,500 projects that have not yet started construction are expected to be positively affected by this decision. So, because more than 2,500 new projects have been given this 4-year completion period, they can ultimately benefit from it. If that happens, With so many projects starting simultaneously, we can interpret this as having a positive impact on Persolar. Since it's been a while since I've done a broadcast, I thought I'd talk a bit about my portfolio today. For your reference, my United States stock portfolio has had almost no changes over the past 2 weeks. What does that mean? It means that I've secured the cash ratio I'm aiming for and haven't done much buying or selling. Usually I keep an 8-to-2 ratio. 8 is in stocks and 2 is held in cash. You can understand it as I maintain this allocation ratio as it is. What that means is, at this point, the possibility of a sharp drop in United States stocks is very low. In other words, I don't expect a bear market. That's how you can interpret it. However, despite that, since small corrections can always happen at any time, it's good to keep about 20% in cash to prepare for those corrections. So it's fine if stocks keep going up, and if a small correction comes, you can use it as a buying opportunity. That's the kind of strategy I'm using. And that's why I'm not being too cautious. Putting 80% into stocks is a bold strategy. The reason I believe the stock market will keep running like this is because, let me show you the results of the American Association of Individual Investors survey once again. If you look here, as of August 13, 2025, which would be last Wednesday. If you look at the numbers released on Thursday, you can see that the market sentiment still hasn't recovered. Only 29.9% of investors believe that the United States stock market will rise over the next 6 months, so they're optimistic, while 46.2% actually think that after 6 months, United States stocks will have dropped, so they have a negative outlook. What that means is, these people have already sold their stocks. Now, the more people there are who have sold their stocks, in other words, the more people holding cash, the harder it is for the United States stock market to fall into a deep correction. When stock prices drop, others buy, and if they drop more buyers appear, so there's a strong chance buying demand will continue. On the other hand, if the majority of people have such an optimistic outlook, because many have already bought stocks, few will be left to buy if prices drop. During times like this, a deeper correction is more likely. But on the other hand, when there are a lot of investors with such a negative sentiment, there's plenty of cash ready to come in whenever stock prices fall, so the correction is likely to be very shallow. I think we can interpret this positively. If any of you have almost no cash and are currently holding 100% stocks, what about you? You might feel like you want to increase your cash holdings a bit. Now let's talk about whether it would be better to trim some stocks from the United States main topics or reduce your holdings to increase your cash ratio. I'll continue discussing this. I'm going to show you 3 images. The first image is sorted based on the 200-day moving average. The 200-day moving average is found by totaling the stock prices from the last 200 trading days and dividing by 200. In this way, you get an important technical indicator that helps you identify the long-term trend of a stock. There's even investment advice that says you shouldn't even look at stocks trading below the 200-day moving average. That's how important this long-term trend line is. Let me go and show you for a moment. I've sorted these based on the 200-day moving average. As you can see, there's only one in red. This is the trade desk. Its stock price is down 40% from the 200-day moving average. So, you can see that there's no sign of a long-term trend recovery. And for a stock like Tesla, its price is currently up by about 23% compared to the 200-day moving average. This means it's very important to watch whether it will rebound from the 200-day moving average here or break through and fall below it. If Tesla's stock price breaks below the 200-day moving average, it could mean that it will go through a correction for a longer period. That could be interpreted negatively. I've organized the information for you. Before the market opened on Monday, August 18th, only one stock was trading below the 200-day moving average. It's Trade Desk. However, Trade Desk's 26, and when the relative strength index falls below 30, it's considered oversold. So in my case, I want to either reduce my position in Trade Desk or remove it from my top picks. Because it's so oversold, I think there might be a brief technical rebound. And if a technical rebound does occur, rather than believing that the stock will just keep going up from there, I personally think it would be better to take it as a selling opportunity. The second criterion for selling is the 50-day moving average, which shows the short and mid-term momentum of a stock price. There's a specific reason the 50-day moving average matters. There are many institutions and quant investors. Quant investors are people who invest by doing numerical and quantitative analysis like this. Now, when these investors rebalance, they often use the 50-day moving average as a reference line. Sometimes they use the 60-day moving average instead. That's why it's very important to look at whether the stock price is above or below this line, and if it's below, whether it breaks through and goes up, or if it's above, whether it breaks through and goes down. You can think of the 51-day moving average as a trend line that's really worth paying close attention to. If we sort again based on the current 51-day moving average, there are 3 stocks in red. Coinbase is currently 5.73% below the 51-day moving average, Strategica is at minus 7.80%, and the trade desk is 29.77% below the 51-day moving average. So you can see that these stocks currently have weakened mid to short-term momentum. Sometimes the stock price is over 20% or even 30% higher than the 10, 50 or 200-day moving averages. This means the stock's upward trend is very strong. However, if it's too far above the trend line like this, it can actually be interpreted as a sign of overheating or a short-term peak. That means a technical correction could occur, so we need to be a bit careful with these stocks as well. If you plan to buy more, it's better to wait for a technical correction before making additional purchases. This time I'll explain the trend of the United States top picks using the 50-day moving average, the 200-day moving average, and the 10-day moving average as the basis. First, let's look at when the stock price falls below the major moving averages. If the stock price is below the moving averages, it means that the trend for that period has worsened or has turned downward. If a stock drops below the 10-day, 50-day, and 200-day moving averages, all trends, short, mid, and long-term, are negative. That's a very bad sign. Currently, the strongest warning signal is showing. That's how you should view it. Now, regarding the Mijun topic, there's a stock like that. It's the trade desk. The trade desk is currently down 22% compared to the 11-day moving average, down 29% compared to the 51-day moving average, and down 40% compared to the 201-day moving average. So, as I mentioned earlier, since it's currently oversold in the short term, a technical rebound is possible. However, when that rebound comes, it's actually better to reduce your position in this stock. I think that's how we should understand it. Now, the second point, the stock price is positioned above the long-term trend line, which is the 200-day moving average. However, it has broken below both the short-term 10-day moving average and the mid-term 50-day moving average. In this case, you can interpret this as the recent upward momentum has completely faded and the mid-term trend has also turned downward. There is one such stock. If you look at MicroStrategy right now, it's about 5% below the 10-day moving average and about 7 to 8% below the 50-day moving average. So the current trend is really not good. Of course, in the case of MicroStrategy, when Bitcoin goes up, it goes up together, and when Bitcoin falls, it tends to go down as well. Therefore, it might be a bit difficult to analyze using only the 2 moving averages, but at least you should keep in mind that technical analysis offers these kinds of insights. Third, the 50-day and 200-day moving averages might be fine, but sometimes only the 10-day moving average is separated. In my opinion, in these cases, you can actually see it as a buying opportunity. Most of the current United States top picks are like this right now. You could say it fell alongside the overall market decline. It's not an issue with specific stocks, but rather that money briefly left the tech sector in the market. So you can see it as undergoing a healthy correction. Therefore, as long as the 50-day moving average is intact, dropping below the 10-day moving average just means it's going through a short-term correction, so personally, I don't think it's something to worry about too much. As I mentioned earlier, sometimes the stock price is excessively higher compared to the moving averages by 30% or even over 40%. In these cases, you can see it as being in an overheated state. About 2 or 3 weeks ago, Palantir had gone up a lot like this, and after that, Palantir went through a correction. I showed you briefly earlier. But if you look at Palantir's stock price trend, it has dropped more than 5% over the past week. If you notice overheating, it's wise to temporarily reduce your position. That's the approach you should take. Currently, among top United States stock picks, based on the Relative Strength Index, there's one stock that has risen above 70, and that's Alphabet. In the case of Alphabet, its Relative Strength Index has reached 72, entering the overbought zone. So in a way, right now, instead of thinking you should buy more just because the momentum is good, it might be better to consider buying more when there's a brief technical correction. And now, although the Relative Strength Index has dropped below 70, there's a stock whose price has surged. That's Peelsol. It surged by 11.05% in just one day, showing strong momentum. However, if it rises a bit more, since the Relative Strength Index is currently at 68, once it goes over 70, this stock could also see a short-term correction. That's how you should look at it. Let me summarize. So, for those of you who want to increase your cash holdings or secure some cash right now if you have such plans, I think you can approach it in one of two ways. The first approach is, since the momentum is very weak right now, to reduce your holdings before it drops further. It's about managing your losses. In this case, the trade desk is in the best position. As you saw earlier, the 10-day, 50-day, and 200-day moving averages have all broken downward. All short, mid, and long-term trends have turned downward. So, for those of you who have a high proportion in the trade desk, this is a good opportunity to reduce your holdings a bit. And secondly, for strategy as well, both the short-term and mid-term trends have turned downward. It has fallen below both the 10-day and 50-day moving averages. Therefore, you can see that these two stocks currently have the weakest momentum. Now, on the other hand, you could also consider taking some profits from stocks that are overheated. For those who want this kind of strategy, the top priority right now is Alphabet. Among the United States top picks, Alphabet is the only one with a Relative Strength Index above 70, currently at 72. The second to consider is Persolar, because it surged more than 11% last Friday, so stocks that have risen this sharply can be highly volatile in the short term. Therefore, since it has gone up quite a lot, there is also a possibility that it could suddenly drop. So I would like to point out that we need to be a bit cautious with these kinds of stocks. Finally, today's last content is the Mijun podcast. Is this a podcast that's been prepared after a very long time? We put together the podcast with an article related to Bitcoin, and the main topic of this article is Bitcoin. According to the content of this article, the peak of Bitcoin's bull market is likely to come this fall. Therefore, since it's still the middle of summer, it can be understood that Bitcoin could remain very strong for at least a few more months, according to this claim. That's all for today's broadcast. This was Mijun, your United States stock news, coming to you after 2 weeks. You might be a little disappointed. It seems that the current conditions don't really allow me to produce broadcasts with the same quality as before. An internet technician is scheduled to visit in about 2 or 3 days. So I'm going to get things set up so I can work properly by the end of this week. Starting next week, I'll do my best to prepare so that I can get back to normal. I'm extremely busy this week. Last week, I visited the kids' school about 4 times. Since coming here, I've really noticed that Asian parents are very dedicated and pay a lot of attention to their children. So I also became competitive and started working hard, which is why I'm having a very busy schedule these days. However, for everyone who supports Mijung and all our subscribers, I will make sure to thoroughly prepare so that we can continue to improve the quality of our broadcasts. All right, I want to thank everyone who stayed with us until the end of the broadcast, which we brought to you after 2 weeks. Let's keep fighting together until we can all retire by investing in United States stocks. Have a happy day. Thank you. Hello, Mizuhom family. Did you start your day well today? It's been a few days since we arrived in Kuala Lumpur. It's been a hectic few days. Now that I'm getting used to the time difference, I find myself checking the sunrise and sunset times in the morning. Just as I remembered Kuala Lumpur's mornings and sunsets are exactly how I miss them. Hello.
Everyone, yes, I'm also trying to get back into my routine now. I hope you all started your day with lots of energy today. Let's take a closer look at some interesting analysis data together. It's about the future outlook of Bitcoin. We'll be discussing this based on an article by analyst Debit Genonin titled Bitcoin, the next few months could be pivotal.
This article argues that Bitcoin may have entered the final stage of the halving cycle, which historically has shown the strongest upward movement.
The halving cycle's final stage? Yes.
So today, as we look at this data, we'll examine what past patterns were like, how institutional investors are moving, what impact changes in government policy have, and even the technical signals on the charts. Let's take a look at these various factors. We'll also go over whether there are any risk factors and explore together how you can best understand this information. Sounds good?
Then let's start by breaking down the main argument that we're in the last stage of the halving cycle. What exactly does that mean, and why do they think this timing is important?
Bitcoin goes through what's called a halving every 4 years or so, where the mining rewards are cut in half. Yes, that's right. Historically, after each halving, especially later in the cycle, prices tend to rise significantly. What's interesting about this analysis is this. In the last 2 cycles, it took exactly 1,064 days to go from the bottom to the peak. Of course, this is just a simple calculation, but if this pattern repeats again, then around October 2025 could be the peak of this cycle. That's the kind of prediction people are making. The past doesn't guarantee the future, but it's a pattern worth noting. Wow.
1,064 days. What an incredible pattern. You mentioned institutional demand is the main driver this cycle. How significant is it?
It's quite significant. For example, MicroStrategy reportedly holds over 620,000 bitcoins as of early August. Other companies include Mara Holdings with 50,000 eCapital, with 43,000 and more. You know, the spot Bitcoin ETFs launched in the United States, they've already attracted over $100 billion, which is over 30 trillion won. SEC disclosure materials show many institutional investors have bought this exchange-traded fund. As you know, Bitcoin's total supply is fixed at 20 million.
That's right, but
If huge amounts of institutional funds keep flowing in like this, it's only natural to expect that, according to the law of supply and demand, there will be strong upward pressure on the price. Individual investor participation is also important.
I see. The supply is fixed, but the demand keeps increasing. That definitely makes it a factor that leads us to expect a price increase. But you said the government is also taking action?
Yes. President Trump recently signed an executive order allowing investments in cryptocurrencies like Bitcoin through retirement accounts such as 401ks. If this is actually widely implemented, it could create steady buying demand in the long term. This is also quite a big change. Also, the United States government holds 200,000 Bitcoin. China has 190,000 Bitcoin, and countries like the United Kingdom, Bhutan, and El Salvador own significant amounts of Bitcoin.
The governments hold it directly? Yes.
This also has the effect of reducing the amount of Bitcoin circulating in the market, and in another sense, it can be interpreted as a sign that Bitcoin is gradually being recognized by the institutional sector. It can be a positive factor for the price.
Institutions and the government are greatly changing Bitcoin's environment. Then, in terms of technical analysis, on the chart, what signals do you see? There seem to be some complicated terms. Yes?
I'm considering a potential upward trend based on several indicators, starting with a hidden bullish divergence.
Hidden bullish divergence is tricky.
Simply put, the price keeps making higher highs, but a certain indicator, in this case the relative strength index, is actually making lower lows. When this appears, it's usually interpreted as a sign that the upward trend is likely to continue.
So the price is rising, but the indicator is going the other way.
That's right. And there's also an indicator called moving average convergence divergence, which shows the strength and direction of the trend. Recently, this showed a slight decline from July to August, but signs of recovery are now appearing. The histogram's red bars are decreasing as the analysis indicates.
So it means that the short-term signals can be seen as somewhat positive. How about from a long-term perspective? I've also heard people mention the monthly chart.
If you look at the chart, this is even more interesting. There's something called relative strength index or relative strength index, and usually if it goes over 70, it's seen as a sign of overheating. But in the past, when Bitcoin prices peaked in 2017 and 2021, the relative strength index shot well over 90. It was really hot back then. But right now, the relative strength index is still staying in the 70s. Of course, this is just a past pattern, and there's no guarantee it will repeat this time, but if history does repeat itself, there could still be more room for an upward trend. That's one way to interpret it.
It's not quite an overheated phase yet. You could see it as that kind of signal. But of course, it's not all rosy prospects, right? What kinds of risk factors are being pointed out? Yes.
Yes, there are some, with trading volume being the most noticeable. From April to July, the price went up, but the trading volume on the monthly chart actually decreased. This could be a sign that market participants aren't as confident in the upward trend as they used to be.
Prices are rising, but buying power is falling.
Yes. Analysts warn we can't rule out that this bull market may have already peaked near $113,000.
A drop in trading volume is a sign to watch closely. Are there other risks?
The main risk is Bitcoin's extreme volatility.
Haha, that's right. The price swings are just so intense.
Yes, historically, it's not uncommon for it to drop more than 70% after hitting a peak. The analyst suggests using indicators like the monthly relative strength index instead of always holding long term. He suggests that if you believe the market is overheated, you could sell some and buy back after a major drop. This strategy may help you avoid big losses. It's nearly impossible to get the timing perfect, right?
Timing is the hardest part. Still,
It's a strategy worth trying from a risk management perspective.
I see. You're even suggesting a risk management strategy. So, what is this analyst's final conclusion? That
Considering that, they predict the upward trend could continue until October 2025. They recommend a target price of at least $150,000 for this cycle. This is about 10 times higher than the 2022 low and matches the 2.61 Fibonacci ratio from previous price movements.
$150,000 is an incredible prediction. Yes, today we took a really multifaceted look at Bitcoin's future outlook through David Janon's analysis. There was really a lot of information, from historical cycles to the movements of institutions and governments, technical signals, and even the risks that we can't overlook.
That's right. Actually, when dealing with highly volatile assets like Bitcoin, you really have to look at a variety of factors just like we discussed today. I think it's most important to have a balanced perspective that takes everything into account, like what the past patterns were, what variables affect supply and demand, what signals technical indicators are sending, and what the potential risks are. Yes.
A balanced perspective is really important. Lastly, I'd like to wrap up by leaving you with a question to think about. What if Bitcoin goes beyond just being a speculative asset and becomes, let's say, a kind of reserve asset recognized by countries or institutions, or even becomes a solid part of our retirement portfolios? In the long run, what kind of changes could this bring to our society or economic system? It might be worth considering this deeply at least once.
Thank you for being with us today as well. Have a happy day.
Thank you.
Shall we plant a hopeful future together? Growing little by little every day. Is there excitement blooming in your heart? Let go of your greed, this time won't be any different. The result is just a continuation of the process. Even if a dark adjustment comes, I'm not afraid. Holding Miju's hand, I'll move forward and become the light of an unseen tomorrow. A happy investment, supporting each other's dreams. Let's walk together down a beautiful downhill path. A happy investment, together with Miju, until the day we all retire with United States stocks, all together.
Subtitles provided and may include advertisements.